This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, May 19th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, July corn down 3/4 at 476 1/4. July soybeans are up 3/4 at 1213 3/4. And July Chicago wheat was up a penny at 665 1/2. No export sales announcements here this morning. Yesterday afternoon, we saw weekly crop progress and conditions report come out. Corn 76% planted. It was against 57% from a week ago. So a real solid week on the planting side and above the 5-year average of 70%. Soybeans, same story, 67% planted. That's up from 49% a week ago and well above the 5-year average of 53%. Spring wheat side jumped 20 points, 73% planted. That was against 53% a week ago and well above the 66% 5-year average. Winter wheat, completely different story. Dropped a percentage point in the good to excellent category. 27% now good to excellent. That's the lowest rating for this week since 1996. One thing to note, the poor to very poor category increased to 43%. The big five that we've referenced a number of times, Kansas, Oklahoma, Texas, Colorado, and Nebraska now account for 9.6% in the good to excellent category, with a staggering 62.6% rated poor to very poor. With that, guys, good morning. Hope everybody's doing well. A couple things to point out here overnight. President Trump yesterday postponing a planned attack for today. Said that they're at the negotiating table, so we'll have to see what's going on there. And we still continue to digest what the White House issued on Sunday regarding $17 billion in additional ag purchases. And I know Dustin we'll start right there, because I think, we had a pretty good conversation here before the war room started, just in, what this ultimately could mean. And I think you had a couple of charts that kind of highlight what there could be a potential here, and maybe what the market's trying to digest as well.
Yeah. So I think there's been a lot of questions like this. Does this move the needle? And I think it does. I think if we want to pull up the first chart, Jack, this is a chart of total Chinese ag purchases from the U.S. Going back to 2016. So that was the big drop off. The first two orange bars was the first trade war, and we came out of that with that phase one trade deal agreement, which required them to buy $50 billion a year in ag products, which everyone kind of scratched their head like that was like a very large number that was expected to be almost unachievable at what we were selling at the time. They did make a pretty good effort. You see that we peaked out in 2022, and that was largely through higher prices that they paid. We almost reached $41 billion there in the green line. And then, of course, we really tailed off, and that's what led us to this point, why we're having these discussions in 2025. So, the question is like, well, what are they going to really buy corn? Are they going to really buy sorghum? To reach that $17 billion beyond soybeans, I think they're absolutely going to have to. If you go to the next chart, this kind of line items, what constituted those sales over the course of those years. 2022, when we peaked out, I think it was $4.8 billion in corn alone. So corn, cotton, sorghum, we're going to need to see fairly large numbers across the board, I think, to get that $17 billion beyond the 10 to 12 billion that would be beans. And what happens in those cases is if China is a kind of a new buyer or an uneconomical buyer to satisfy a trade agreement, prices can often rise and make that happen sooner.
Yeah, Justin, you've said it a number of times, and I think it's going to come down to, are they going to buy a whole bunch of uneconomical things, and what does that mean for South America? They're just going to have a pile of beans sitting on the, sitting there looking for a buyer. So it's an interesting conundrum here.
Yeah, it's always the, I think the question a lot of people have had, myself included, is just where does it go? We're already, we're already a large premium over South American soybeans. So they have the 25 million ton per year of just soybean purchases, and then you have to go buy a bunch of other things. So whose balance sheet do those extra supplies sit on is the question. Now you could say that obviously a larger percentage has sat on our books while they've kind of boycotted U.S. products. But South America's ramped up to kind of export everything. So if that were to shift, I doubt, I don't think they have the storage capacity. I mean, they've got bagging systems. I mean, it becomes a whole big arbitrage between, the ABCDs of the world, moving product from one place to another. And, a lot of that money will be made between those arbitrages.
From the commercials, yeah.
Well, can it be, I think it's definitely a headwind for us. I mean, a tailwind for us, obviously why you saw such big buying and all those things. At the end of the day, it's just a hard matrix to figure out.
Sure. Ben, what's on your
new demand, right? It's not China didn't come in and say, you know what, we're just going to consume an extra 30, 40 billion dollars worth of ag products a year. They're pretty mature. I mean, you look at, the imports have just kind of stagnated. They're having issues in their hog industry. So there's a lot of products that they just don't need right now. So I just don't know how that's going to work.
Yeah. Ben, what are your thoughts?
Looking at yesterday's trade, a pretty strong reaction. Felt to me like maybe it was a little overdone. When you see July-Dec come in 4 or 5 cents on something that is the next year to, 14 months, however you want to look at it, to get, even if all of this were to be executed, I thought it was a little aggressive yesterday. I think that we have to give the Chinese credit. They're pretty good traders, and I don't think they're going to go chase this thing higher. And it's a tough time domestically in our markets with weather looking pretty good, I think, to get super aggressive. Now, if things were to change in the weather, again, I think we can latch on there. But I thought yesterday was a little overdone. Certainly, I think there's some people in the torture chamber in wheat. A lot of people that really, I'm one of them that thinks that Chicago KC should move wider. And I'm sure there was a lot of people in that trade. And the Chinese, if they're going to buy wheat, they're most likely going to buy soft red. So I think we're running some people in over there. Knee-jerk reaction, and just wait and see how it trades out today. It still looks to me like it's setting up to be kind of a wide range. It means maybe we can trade it a few times. Volatility certainly believes that. So we'll see.
Yeah, it's gonna be interesting, guys. We're not a lot of guidance on this deal. I mean, I'm sure that more and more gets leaked out and stuff like that, but it's like a wait and see type of deal, which is, incredibly difficult for, the farmer, everybody. I mean, we've got good weather. We talked about that before too. We're by all accounts, we're off to a pretty good start, and things are going to start looking good. We'll come back next week after Memorial Day and got some heat on this crop. But yet we're just, what if headlines, it just makes it brutal for guys to make decisions. And we always talk about balance and just understanding what works for you. But man, this is tough, quite frankly. You can't draw it up any other way. Dustin, what do you tell guys, outside of be balanced and make it okay for you,
Yeah. I mean, it's just, it's really easy, I think, to go back and just look at the last 2 years of how frustrating the low margin environment's been. And this is the first time that we're seeing new crop margins pencil like pretty good numbers for a lot of people ahead of knowing their yield. So, at an APH yield, we can start to see profitability again at $5 corn and at $12 beans for a lot of growers. So that part, I think you run through the scenarios of flash forward to, that time of delivery, whether it's, harvest or January, February, March of 27. And if you're selling a 420 environment, when right now you can get something above $5 for March corn, what is that going to look like on your balance sheet? How's that going to feel that we didn't do enough here? And I think that kind of provides the answer for us, not just the matrix of possible outcomes that we look at, just the feeling of wow, we did it again, right? Market came right back down. We lo and behold, we had another crop, and demand did not reach all this expectation we had. We need to have something of a floor beyond crop insurance. There's no question we need to have risk measures in place. Now, that's my hedging hat on, and I am actively doing that for most of our customer base. Would I also, consider the opposite, which is that we run into some sort of weather event and we run up to $6 corn because China was also buying in that same time frame, and that this is like you get advisors that browbeat you into making good financial decisions, but you find yourself way too sold in a rise to $6.50 corn. That's always a possibility we have to account for. So the trick is doing just enough with scenario one that you're not going to completely regret that you had that opportunity for $5 corn, and enough that you're still in scenario two where you can actually partake into a good margin year like we just came out of in 21 through 23. So it's a balancing act, but that's why, like, we're brokers, we're advisors. We're not trying to predict what's going to happen. That is up to Mother Nature at this point and these uncertain outcomes from trade deals. But we can set up a very unique environment for just your risk profile. And I know it sounds boring to have that, but I've seen a lot of, in this, 18 years I've been doing this, a lot of big bets that have been taken because it's going to be a drought year or it's going to be a bear market year, and the opposite happens. And, that long of hedging, it's humbling. You have to kind of account for just good risk profiles.
That's really good stuff. Zach brings an interesting question, and I know we don't know the answer to it, but at least I guess I would frame it this way, Justin. How patient is this market going to be getting details from what this could mean? Do you think that this is kind of we talk about like price pockets and things like that of like where we're at, right? What's your opinion of that, Justin, with everything we know today?
Well, I think we saw, you kind of saw a little foreshadowing of what the market thought when we didn't get guidance day one last week. We had a 50-cent sell-off immediately. So yeah, I think the market's going to be super sensitive to all those things, especially going into good weather time frame. So I think this was a great rally to get, if you felt like you missed it the first time on getting some price floors or something that gets you through the next 60 days. I think you got to seriously consider doing that here. Think of how you felt Friday going, into the weekend, versus now. And I think that's, I still think options are way too inexpensive for the potential outcomes that we have over the next 90 days. So that's my take on it.
Yeah. Very good stuff. We got a couple minutes here. Let's we'll quickly move over to livestock, Ryland. Two-sided day for cattle, and hogs tried to start strong, but faded by the end of the day. So what are your thoughts here today?
Yeah, overall, just kind of felt like we digest a decent chunk of the immediate China news, so we started pretty firm here yesterday and then just could not hold on. So naturally, I think you see some profit taking just before we really start to see how cash trade shapes up this week. And I think just the way the market's kind of structured here is still pretty optimistic overall. We have this pretty deep discount on the board here, so would like to see that kind of tighten up. But at this point, just haven't seen the Packers really start to move yet. I think just like I said, overall, there's at least a little bit more just kind of optimism that things are going to hold up, but the price on the board it's definitely a little bit scary. But obviously beef prices are still pretty firm here. Choice up 289 at 392.14, select 390.23 up 98. So we are seeing beef prices still kind of firm here. So I do think there is going to be some kind of wait and see with how this plays out with China. If there's going to be some kind of immediate purchases or good faith purchases, maybe to get things whooped up, but overall just have kind of yet to be seen at this point. on the hog side of things, just cannot muster up any real strength. Even when we see a little bit more support in carcass here, it's just not really taken off the way everybody would expect seasonally. So maybe need some more time on that. But overall, cash was up 336 yesterday. So maybe that gives us a little bit of a spark here, but still going to be pretty cautious here just by the way that we've seen the managed money start to liquidate and reduce their long exposure here. So we will see. I mean, open interest jumped 1,600 contracts. Most of that open interest and commitment going to the August at this point. So like I said, I think most people are just kind of waiting to see if there's going to be more time for a rally here. But overall, cash pretty firm here to start the day.
Very good, Ryan. Appreciate the update there. We just came into the open. We'll get a quick readout here. July corn down 1 penny 3/4 at 475 1/4. July soybeans up 1 penny 3/4 now, 12.14 3/4 is the last. And July Chicago wheat down 1 penny 663 3/4. We talk about it every day, but check it out. The link is in the description for the War Room Report. Get you access to premium content, our special reports that we'll periodically put out, as well as reaction to USDA reports and an overall deeper dive into everything we talk about on a daily basis here on the War Room. So be sure to check that link out there. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course supports our national scholarship competition. We just awarded 5 very, very lucky students with scholarships here in the last couple weeks. We're going to be honoring them July 27th at the AgYield NextGen Foundation golf outing at Royal Country Club. We got a couple of spots left. They're filling up real fast here. Get to meet the AgYield team, industry folks as well. It's going to be a great day. So give us a call. We can get you registered and signed up there. Also, the link's in the description. Again, that's July 27th. So we look forward to seeing everybody. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.